Hello, Finimizers. Welcome to another Finimize live event. My name is Stéphane Renevier. I'm an analyst here at Finimize, and I'm super happy to host today's event on Bitcoin-denominated life insurance with our partner, Meanwhile. So I'm actually super excited because, to be honest, I've never heard about Bitcoin-denominated life insurance. So, I'm really looking forward to actually learning a lot about it myself. But first, some very basic housekeeping rules to run through. Number one, feel free to say hello in the chat and remember to switch to all attendees so everyone can see your messages. Number two, this is a 15-minute discussion followed by a 15-minute audience Q&A. So please use the Q&A box to ask a question, not the chat box. And if you see a question you like, just upvote it so it moves to the top. And that way we can get through the most upvoted questions first. So let's get started. So today's session is brought to you in partnership with Meanwhile. If you're not familiar with Meanwhile, where they're the first and only life insurance company denominated in Bitcoin. It allows you to leverage the value of your Bitcoin today and pass it to the next generation without passing on a huge tax burden. Licensed and regulated by the Bermuda Monetary Authority and recognized as a global leader in insurance regulation and innovation, their life insurance is designed to further diversify your portfolio. With that out of the way, I'm super happy and pleased to introduce today's guest, Jason Leibowitz, Head of Business Development at Meanwhile. So Jason is on a mission to revolutionize how Bitcoiners protect and transfer their wealth, and is passionate about helping fellow Bitcoiners solve the critical challenge of Bitcoin inheritance planning, tax optimization, and secure wealth transfer. Before joining Meanwhile, he led the private wealth at Hashnote, developing risk-mitigated yield strategies for crypto investors. This nearly 20-year journey through both TradeFi and crypto has given him a unique perspective on the challenges facing long-term crypto investors. So Jason, real pleasure to have you here. How are you doing first?
Thanks, Stefan. Great to be here and doing well.
Awesome. Okay, so let's dive in. So look, a lot of Bitcoiners, they're all about HODL forever, right? We always hear that. But why do you think legacy planning matters so much for them specifically, and what could go wrong if they don't have a plan?
Yeah, no, it's one of the most important elements. I mean, Bitcoin has been around since 2009, and until recently, it's been widely accepted as one of those long-term store of value alternative assets. Something that, if you really understand Bitcoin, not necessarily as a Bitcoin maximalist, but certainly if you are a Bitcoin maximalist, that you want to hold your Bitcoin for as long as possible. You think it's going to go up in price over the course of our lives, which means that you have to hold it for your life. And if it does go into the millions of dollars a coin, which I think many of us believe it will at some point, then hopefully it can become generational wealth, something that you'll want to pass down to your children or your inheritance or your beneficiaries one day, your loved ones, your family. But how do you guarantee that your Bitcoin will stay there forever? I mean, there are so many instances where people lose their Bitcoin, they lose their passwords or private keys, they get hacked, they have bad counterparty risk on an exchange that goes bankrupt, or they think they're doing everything right and they have Bitcoin on a self-custody ledger, private key, they own the private keys on a USB stick. They put it in a safe, and unfortunately, their house burns down, like in California in the Palisades fires, where a lot of safes proved not to be fireproof, even though they thought they would be. And so, how do you guarantee something that has such tremendous value and a huge market cap in the trillions of dollars will be there for decades and generations to come? This is what Meanwhile sets out to solve by having life insurance in Bitcoin, meaning that your Bitcoin will outlive you, is one of those key components to that HODL mindset. And it's a solution that we've developed to a real problem of how do you make sure that your Bitcoin lasts for a very long time.
So can you actually walk us through how this, Bitcoin denominated life insurance works in practice and, how it stacks up against the usual, estate planning stuff?
Sure. So in order to have Bitcoin denominated life insurance, we set up a life insurance company, a life insurance carrier. We're based in Bermuda, where most life insurance and reinsurance companies are. That's because Bermuda is one of the premier destinations for insurance companies. one of the most globally accepted and credible regulators on the planet when it comes to insurance is the Bermuda Monetary Authority, where we hold our licenses. And so we set up a very plain vanilla basic life insurance company, the only difference being that our currency is Bitcoin. We're on the Bitcoin standard. Everything we do is Bitcoin denominated. You pay your premiums for this whole life insurance product in Bitcoin by transferring Bitcoin from wherever it is into your Meanwhile vault. We custody with Anchorage, so you get your own Anchorage custody vault for free. So you pay your premiums in Bitcoin. Your death benefit is paid out in Bitcoin. It's whole life insurance, so there's a policy loan component where you can borrow against your policy, just like you can with all whole life insurance, except you're borrowing Bitcoin at a new cost basis, wherever the price of Bitcoin is on the day you originate the loan. And so everything in whole life insurance is tax-free. Your assets grow tax-free. The policy loans are tax-free. The death benefit, when it's paid out, gets a new cost basis, hence it's tax-free. And so what we did was we set up a life insurance company. Bitcoin is our currency. We're backed by some of the biggest names in the world: Northwestern Mutual, Sam Altman from OpenAI, Bain Capital, Han Ventures, Pantera, Fulgur, Framework, Wences Cesaris from Zappo, many more. And we've built this company where all we're trying to do is create a long-term solution for your Bitcoin with all the tax advantages of life insurance. Essentially, life insurance has been around for hundreds of years, and it's always been fiat denominated. And as many of us know, fiat, dollars, quid, you name it, the governments, the central banks of the world are printing lots and lots of fiat, and they're inflating away or devaluing their currency. And so, what once cost $100 now costs $200, and that's because of inflation. And so when you have life insurance with all these tax benefits, but the dollar, the basis of that life insurance solution is in dollars, is getting inflated away, and it's losing its purchasing power, then even with these tax advantages that you get, you're still like trying to bail out a boat that's flooding with a bucket, but the bucket has a hole in it. And so if you do everything in life insurance in hard money, in sound money that's not inflating away, Bitcoin, then suddenly your purchasing power increases, the value of your assets increases, and you still get all these tax advantages. So I'll tell you how it works and how we built the product. Essentially, we have a core product right now. It is a 10-pay, it's called a limited pay, whole life insurance product, fully denominated in Bitcoin. With traditional life insurance, you might go to the insurance carrier and ask them for coverage, like $1 million in death benefit coverage. They'll say, great, they'll crunch numbers based on your age and health and all that, and dictate to you an amount of dollars in premium that you have to pay either each month or each year. And those dollars go into a mutual fund, and that mutual fund has a guaranteed growth rate of 4%. And in the future, you can borrow out of that fund, that portfolio, without paying any taxes. It might be up 50%. You don't have to pay cap gains on the 50%. Now, we do that all in Bitcoin, but we had to change it up a little bit in order for it to retrofit to work with this scarce asset that is Bitcoin. So instead of coming to Meanwhile and saying, I want, coverage, $1 million or 10 Bitcoin in coverage, we can't do that because we can't tell you how much premium you have to pay because Bitcoin's a scarce asset. And so everyone has a different amount of Bitcoin. We don't know how much Bitcoin you have. So instead, a potential client comes to Meanwhile saying, I have this amount of Bitcoin, spot Bitcoin, not the ETF, not wrapped Bitcoin. It has to be actual spot Bitcoin that you can move from wherever wallet it is into a new wallet that we will create for you. And you come to us saying, I have, let's say as an example, 10 Bitcoin that I'd like to use as premium. What do I get for that? Well, we will then crunch numbers based on your age, your health, your sex, your smoking status, and give you a death benefit ratio in Bitcoin that you get guaranteed and fixed relative to the amount of premium that you want to use. So let's say as an example, a 35-year-old healthy non-smoking male has 10 Bitcoin that he wants to use as premium. Well, he would get about 18 Bitcoin in death benefit. So by paying 10 Bitcoin and it's over 10 years annually, so 1 Bitcoin a year for 10 years, and then you're done for life, he would get an 18 Bitcoin death benefit. That's an 80% return or an 8 extra Bitcoin that you get. And the way that we turn 10 Bitcoin into 18 Bitcoin is through growing our balance sheet, our portfolio. We're a life insurance company. We have to generate yield. So we guarantee, instead of 4% with the mutual fund and the traditional life insurance, we have a guaranteed growth rate of 2% in Bitcoin denominated terms, not dollar terms. So you're getting 2% Bitcoin yield with the product. You get this 8 extra Bitcoin, 80% return for this example of the 35-year-old. And really interesting is the policy loan element. As I described earlier, that mutual fund might be up 50%. You could borrow dollars out, not pay the cap gains in that 50%. And by the way, you never have to repay a loan in life insurance. Let's say you borrowed 100K out of that traditional life policy and $1 million was the death benefit. You don't have to repay the 100K ever. Your new death benefit nets down to 900K, a million minus the 100K loan, 900K is left over, and you keep that 100K for the rest of your life. With Bitcoin, it's similar. Let's say Bitcoin goes to $1 million one day. Well, you have two options. One is sell Bitcoin at $1 million, but pay a very big capital gains tax relative to your cost basis, wherever that cost basis is. Or if you have a policy with Meanwhile, you can borrow out of your policy, out of your life insurance policy. And the way that works is you're borrowing Bitcoin, and you can borrow up to 90% of the surrender value. So in essence, it's a 90% LTV loan. So you come to Meanwhile, and Bitcoin's at $1 million. Everything's online. You go to your portal, you see your maximum loan amount. Let's say you want to borrow 2 Bitcoin. You give us a wallet address, we'll screen it with Chainalysis, make sure it's not going to North Korea or something like that. And then we'll send you 2 Bitcoin to that wallet address. At that point, Meanwhile's done. Now, presumably you want cash. What do? You go to an exchange and you want to sell 2 Bitcoin. They're going to say, hold on, where did this Bitcoin come from and what's the cost basis? Well, you'll have a loan document that says it comes from a regulated life insurance policy at Meanwhile, and the cost basis is established on the day I originate the loan. In this case, the cost basis on these Bitcoin is $1 million a coin. Even though your original cost basis when you paid into the policy and sent your premiums in might have been $1,000 or $50,000 or $100,000 a coin, the way life insurance works with policy loans is it's tax-free. And the way it works with a scarce asset like Bitcoin, not dollars, but Bitcoin, is you get a new cost basis, in this case, a stepped up cost basis. So you're getting different new Bitcoin at $1 million a coin. You show that to the exchange, they say, oh, great, your cost basis is $1 million. You sell that day at $1 million, your cost basis equals your sale price. There's no difference. So therefore, there's no taxes, no 1099 if you're in the US. You keep the 2 Bitcoin turned into 2 million cash, 1 million each. You get that 2 million withdraw to your bank account, that's yours forever. Your new death benefit, it was 18 in that example. You borrowed 2 Bitcoin. 18 minus 2 is 16 Bitcoin. It carries an interest rate of 3% on that loan. So you're paying 3% in Bitcoin terms on the 2 Bitcoin you borrowed. That also gets netted out of your death benefit automatically. So in the end, you had 18, you borrowed 2. You now have 16 Bitcoin in death benefit. By the way, you still have your original 10. You only ever had 10 that you bought, that you were smart enough to buy over the course of your life. You weren't going to buy any more. Bitcoin's very expensive now, but you're selling out of the future death benefit. So it's an amazing way to get yield, 2% yield in Bitcoin terms, to get tax-free policy loans that you never have to repay. And by the way, you're never at risk of a margin call with Bitcoin life insurance and the policy loans, because you're borrowing Bitcoin against Bitcoin collateral. You're not borrowing from an exchange. You're not borrowing from a lending desk, or even an insurance company. You're borrowing Bitcoin against Bitcoin collateral. So if Bitcoin does crash to $200,000, goes down 80% in the future from $1 million to 200,000, you're not at risk of having a margin call or a liquidation event. We think in Bitcoin, where 1 Bitcoin always equals 1 Bitcoin. It doesn't matter what the dollar price of Bitcoin does. So in the end, you get 2% yield, you get these tax-free policy loans with their low interest rate, no margin call risk, no liquidation risk. You never have to repay the loan, very important. And the last thing is your family gets this death benefit, 18 Bitcoin or net of the loan, 16 Bitcoin. You only ever had 10. And when you pass, you're going to leave your family 16 or so Bitcoin. That's an amazing thing to be able to do. The Bitcoin's at Anchorage. When it does come time that you pass, your beneficiaries, all they have to know is that you have a life insurance policy outstanding. They reach out to Meanwhile, and we work with the grieving family who just, had a loss on what they want. If they want cash, we will help them sell the Bitcoin. It assumes a new cost basis the day that they file the claim. So it's tax-free. They want to sell the 16 Bitcoin, we'll help them sell the 16 Bitcoin tax-free. They want to move the Bitcoin into a new wallet, we'll help them move the Bitcoin into a new wallet. We basically set up a concierge white glove service to help these, insured through this family, through this, difficult process. So this is how you create long-term sustainable HODL Bitcoin through life insurance. And last couple things, we are in US and Canada right now. We will soon be in Europe and more internationally in East Asia. The minimum amount of Bitcoin, remember, you choose your premium. The minimum amount for total premium over 10 years is 0.25 Bitcoin. It's approximately 25 grand total over 10 years. You pay it annually each year. That would be, instead of 0.25 over 10 years, would be 0.025 Bitcoin per year, every year for 10 years, and then you're done for life.
This is honestly impressive. Actually, I had some other questions, but I think you've covered most of them anyway. So thanks for that. That was actually super clear, super interesting. Now we're moving to the Q&A. So please, everyone, just write the questions you have for Jason in the Q&A box, and don't forget to upvote the questions that you want to see answered first. So I see a couple now. Okay, let's go
So
with.
you want me to start looking at the Q&A, and I see some of the upvoted ones?
Yeah, I can just ask them if you want, and
Sure.
I can just read them out loud. Okay, so the first one, you mentioned that the currency of a life insurance are being devalued due to inflation, which is true, but how would that translate to Bitcoin when the volatility value is more of an issue? Therefore, when an insured event happens, what happens if Bitcoin is on a blip and therefore doesn't provide the protection that the policyholder needed? Oh, um, just disappeared.
Yeah,
Which
no,
traditional market?
I get it.
Yeah.
1 Bitcoin equals 1 Bitcoin. Doesn't matter. The volatility of Bitcoin is irrelevant because you're measuring it against some fiat currency. There's 100+ different fiat currencies around the world. It doesn't matter what they're trading against Bitcoin because you have a guaranteed fixed amount of Bitcoin that you leave your family. Even if you get a policy, you pay your first Bitcoin or whatever, 0.25 Bitcoin or whatever it is after year one, and then you die suddenly, tragically, your family still gets, in the example, 18 Bitcoin, the full death benefit, even though you only paid one in. They get Bitcoin, not dollars, not fiat. So it doesn't matter what the volatility is. The whole point of this product is for anyone who already owns Bitcoin or is about to buy Bitcoin and is holding Bitcoin for the long term and is going to pass on Bitcoin to their family. So volatility is not a word that we care about because 1 Bitcoin equals 1 Bitcoin. There is no volatility when you measure everything in Bitcoin.
Interesting. So to be able to borrow against the life insurance policy, you've got to pay full premium upfront. Just want to make sure it's clear how that mechanism works.
No, the way it works is you pay your premium over 10 years in equal annual installments. And after year two is when you can start originating policy loans up to 90% of the surrender value. So let's say in that example, 10 Bitcoin over 10 years, you paid 2 Bitcoin after 2 years, or actually 3 after 2 years, one on day zero, one at year one at year two. You can borrow up to 90% of the surrender value to life insurance calculation that I'm happy to talk through if anyone wants to reach out to me afterwards on a separate call. But essentially, all you need to do is just keep paying your premium, and after year two, you can start borrowing, and you're borrowing in Bitcoin.
How big is your customer base currently? Where are you seeing the most demand for this internationally?
We are around 100 clients. We launched in 2023. We were in the Bermuda Monetary Authority sandbox for a year before they graduated us with our licenses, and we went live. So we have about 100 clients. We have thousands of people applying for our product. We're a very risk-averse company and a very conservative life insurance company. So we only have about a 70% approval rating of applicants. Basically, we have to do internal insurance underwriting on each applicant to make sure that they don't have a terminal illness or something like that. We want our, people that apply to live long, healthy lives. And so customer base mainly right now is US and Canada. We have a lot of interest in like Hong Kong and East Asia and, all throughout Europe. But pretty much everywhere, a lot of people in Latin America as well. We're raising money right now. We're about to announce in the next few days or week or so our latest capital raise, which will have some pretty impressive size and some pretty impressive names that it's going to help us go international. Um, but yeah, so that answers the next two questions.
Yep. And then what is your company fee scheme? I was working in life insurance before, and the major thing I was against in traditional life insurance companies is they charge too much fee here and there.
Good point. Well, one thing that's incredible about how we built our company and the fact that we operate in Bitcoin is the fact that with traditional life insurance, they dictate to you an amount of premium that you must pay either each month or each year, and there's fees and expenses baked into that premium. We can't do that. There's no fees or expenses baked into our premium because you choose the premium. Bitcoin's a scarce asset. You literally choose your premium. If you have 10 Bitcoin, you might do all 10 Bitcoin as premium over 10 years. Or maybe you'll say, you know what, I'm just going to do 8 Bitcoin and keep 2 out of this policy. Or I'm going to do 1 Bitcoin. Because you're choosing your premium, there's no fees or expenses baked into it. The only way that we make money essentially is by making a spread over the yield that we generate. So we generate and give on to every policyholder 2% annual yield in Bitcoin terms. We try to target 3 to 4% yield. The way we do it really quickly is through what's called a repurchase agreement parity loan, where we work with a lot of miners who have low cost basis, captive low cost basis Bitcoin. They want they want to be able to sell their low cost basis Bitcoin without paying taxes. So they essentially do a cost basis arbitrage for tax purposes with us. And it's a fully collateralized loan. They send us, for example, 100 Bitcoin. We would send them back 100 Bitcoin. The 100 Bitcoin that they send us is low cost basis. They don't want to sell because they mined it at $100. And if they sold it, that would be a massive capital gains tax they'd have to pay. We send them back 100 Bitcoin. It assumes today's cost basis. They can instantly sell it. It's a 1-year term and we charge 3.1%. So really the way it mechanically works is they send us 100 Bitcoin. We send them back just around 97 Bitcoin. We have their all 100 Bitcoin fully collateralized, no counterparty risk, no credit risk. They get 97 Bitcoin. They sell it instantly, do whatever they want with it. At the end of the year, they repay back their 97 or roll it to the next year by paying another 3%. What we've accomplished, what I just described super quickly, is we get 3%, 3.1% yield, Bitcoin denominated yield upfront with all of our counterparties, with no counterparty risk, no credit risk, because we have all 100 Bitcoin of our counterparty. If they disappear, go bankrupt tomorrow, doesn't matter because we have all 100 Bitcoin. So this is how we get yield, no risk, no rehypothecation, no counterparty risk. And we keep, we give you 2%. Every policyholder gets 2%. We keep the 1.1% on top of that. That's how we make money. The only way we make money, really.
This is super, super interesting. Okay, next question. How does the volatility of crypto affect the capital requirements for Meanwhile, and how do these requirements prevent this from scaling to compete with standard life insurance?
Yeah, again, volatility is not something that we are concerned with because we literally measure our balance sheet and all of our assets in Bitcoin denominated terms. And if you actually visit our website, you can see our financial statements were audited, the first ever on the planet in Bitcoin denominated terms. Literally a table of numbers, assets, liabilities, and everything else with B's in front of them instead of dollar signs. Everything we do is measured in Bitcoin. There is no volatility because we don't measure in dollars against Bitcoin. And therefore, the volatility of Bitcoin against the dollar or whatever doesn't affect any capital requirements. Our assets and our liabilities are measured in Bitcoin, and 1 Bitcoin equals 1 Bitcoin.
Who is your regulator as an insurance company?
We are regulated by the Bermuda Monetary Authority. They are our chief regulator. They regulate 1,200 or so different insurance companies that are domiciled in Bermuda. That's where we have all of our licenses.
Awesome. And next question, I think you've already partly answered, but maybe to make it even clearer, it is great to see a true Bitcoin-only proposition like this. Can you expand on the annual yield and how this was calculated?
Yeah, so I explained how we get the yield. So it's 2% annual. That's what you get. That's if you do the math for that 35-year-old, we amortize everyone out to age 100. And if you compound the annual growth rate to get from 10 Bitcoin paid over 10 years in equal annual installments from a 35-year-old out to age 100 at 2% compounded growth rate, you'll see that it's about 2% a year every year. So 1 Bitcoin in year one is the premium. 2% on that is 1.02 after year one, and then they pay their second Bitcoin in. Now they have 2.02 and then 2% on that. Compound, compound, compound. After 10 years, it's 10 plus the interest, and then 2% on the 10 and everything therefore after that. So it's 2% Bitcoin-denominated yield. And what you get with this life insurance policy is yield is the tax-free, 2% yield in Bitcoin terms. And by the way, if in dollar terms, Bitcoin goes way up to $1 million or $5 million or $10 million over your life, that 2% annual yield is in Bitcoin terms. It's amplified tremendously, order of magnitude, if the dollar price goes up by 100% or 1,000% in addition. So it's a pretty powerful concept to get Bitcoin denominated yield.
Now, is the Bitcoin insured? If so, how? How is it stored, etc.? Worry about mass attack on your network or employee-based theft, etc. And second question from the same person: is there any U.S. tax issues being Bermuda-based for U.S. citizens?
Yeah. So the security Bitcoin, we custody at Anchorage. Anchorage is a federally chartered trust company in the US. That means that all the Bitcoin is bankruptcy remote. If Anchorage ever had a problem, the Bitcoin isn't insulated from bankruptcy. Anchorage has insurance on everything in custody. So if there's a problem with Anchorage where the government has their Bitcoin, where ETFs have their Bitcoin, where most of the legitimate institutions on the planet have their Bitcoin in addition to Coinbase, then there are much bigger problems in the industry. Two, are there any US tax issues? Nope, there are none. We are an offshore regulator for US citizens, but there are so many offshore Bermuda-based life insurance companies that operate in the US. We operate just like all of them, zero tax issues. All of our clients, for the most part, are US. We also have Canadian clients right now.
Can you pay off the 10-year balance early?
You can. We have a rider called the prepayment funding rider, or PPFR for short. You can pay all of your premiums up front. That doesn't mean that you could borrow more up front, because what we had to create for IRS tax code is something called a non-modified endowment contract, or a non-MEC. What that means is you have to pay your premiums over a minimum of 7 years. We do it over 10 years. For that reason, it allows us, from an AML perspective, to give you AML and KYC and tax perspective, to give you the ability to borrow against your policy tax-free. If you paid all your premiums up front today and thought that you could get all 90% policy loan tomorrow, that would be a taxable event. So you pay your premiums over 10 years, or you could pay it all up front. We will then escrow all the other 9 years of premiums at Anchorage on your behalf, and pay them into your policy one at a time, a tenth at a time each year on your policy anniversary date for you. The reason you do that is some people don't want to have to remember to send in their Bitcoin every year for 10 years. Who knows where you'll be in 10 years? You just do it all up front, set it and forget it, make it easy. People like that.
Okay, maybe a last question. Love the concept, but what happens if the business doesn't make it? What happens to the customer Bitcoin and the assurances that it will be returned? i.e., US citizens suing a Bermuda company doesn't seem easy.
Good point. It's important to note that Meanwhile is a counterparty for any insurance, anyone who has a policy with us. Because we're regulated by the Bermuda Monetary Authority, we are under strict supervision and oversight by our regulator, by an independent board of directors. We're regularly audited. Our Bitcoin's at Anchorage. But most importantly, Northwestern Mutual is a big investor of ours. And when you have big insurance companies invest in other insurance companies that are domiciled and regulated in Bermuda, what happens is Bermuda, at any point in time, if they think there's a problem with Meanwhile, they'll shut us down. They will transition us into either some sort of liquidation event or conservatorship, where what will happen is policyholders come first above all equity or creditors or debt holders. Policyholders need to be protected, and Bermuda knows this. If policyholders pay your premiums in Bitcoin and the company goes bankrupt and you lose all that money, then it breaks the whole model of life insurance. And Bermuda knows this, and every life insurance regulator on the planet knows this, and they will step in before any of this happens and make sure that all the life insurance holders, policy holders, are made whole. Whether that means telling Northwestern, hey, come in and take over, meanwhile, make everyone have a Northwestern policy continued without interruption. You thought one day you had a Meanwhile policy, now it's called a Northwestern policy. Still everything else remains the same. That would be a good outcome for policyholders. Or you just get all of your premiums back. Last thing I'll say is that we also have what's called a surrender value enhancement rider, which is it allows you to get your premiums back or the surrender value back, whichever one is greater at any point in time. You think something's not right, I want my money back. With that rider, you can get all of your premiums back at moment's notice. So you have a lot of optionality baked into what we do and how we offer this product. And therefore you can, kind of take out insurance against yourself on an insurance policy.
I'm afraid that's all the time we have today. But Jason, thank you so much. That was incredibly interesting. Like I thought. Oop, um,
Yeah, I'm here.
Oh, you're here? Oh, I just had the. Yeah, so thanks again so much, Jason. And as you leave the event today, a pop-up survey will appear on your screen. Please take a few minutes to let us know what topics you're interested in hearing about at future events. Thank you so much for joining us, and I look forward to seeing you in the future. And as a thank you for joining, you can join our Modern Investment Summit in December for free. You can find the link in the chat. Once again, thank you so much, everyone, for joining. Jason, thank you so much.
All right, great.